7 dirt cheap Warren Buffett stocks right now on sale that all might be significantly undervalued due to the recent market performance. Now, because of these different names being beat up, they are also all offering higher than average dividend yield, which I love, of course, as an income dividend focused investor. Now, if you're ready to go through all 7 of these stocks, make sure to please drop a like down below and subscribe for more future content like this. The first Warren Buffett stock that is on sale right now and offering almost the highest dividend yield that it's seen in the past 5 years is ALLY or Ally Financial. Now, Ally Financial, according to Simply Safe Dividends, is a 50 on the dividend safety score, which is borderline, which doesn't necessarily mean that there's going to be something like a dividend cut coming up here, but it means that if things don't shape up soon, it's definitely possible. Now, Ally Financial is currently up actually year to date 3.32%, but is still trading towards the lower end of the 52-week range at around $25 per share, $21.50 being the low and $35 being the high. Now, when you stretch out Ally Financial on the long-term max chart, this stock is actually down 3.5%, which is harsh to see, but that's not including dividends. And speaking of dividends, Ally's offering a massive starting forward dividend yield of 4.88%, which of course Warren Buffett loves. It does pay dividend quarterly, and looking at the history of dividends paid by Ally Financials since around 2017, they have not missed a single payment. And their dividends have been going up pretty significantly, although there have not been any dividend increases in quite some time. The next Warren Buffett stock that's on sale right now and is actually one of my holdings is BAC or Bank of America. Now, Bank of America is offering a starting dividend yield of around 3.56% and is a 55 on the dividend safety score, which means it's a little bit safer than Ally Financials, according to SSD, but not necessarily the safest all around. Now, like I said, Bank of America is actually a holding of mine. I've been holding on to Bank of America for years, and it's basically trading right now at the same share price that I started buying Bank of America years and years ago, which is not very great. Now, Bank of America, first off, is down 19.5% year to date, which is pretty horrible. On the max time frame, it's up 6.29%, so not really all that great of a performance as well. But on the 52-week range, it's looking like it could be a good buying opportunity sometime soon here. It's trading pretty close to the low of $25.50 and $38 being the high. Now, for the dividend chasers out there like me and Warren, Bank of America is offering a 3.59% starting dividend yield, which is not too bad at all. And Bank of America has paid a consistent dividend for the last 10 or so years on a quarterly basis, and just as of recently raised their dividend from a 22-cent per share per quarter dividend up to 24 cents, which of course does show some hopeful dividend growth for the future. The next Warren Buffett stock that could possibly be undervalued still is Lennar Corporation or LEN. Now, Lennar is offering a 1.37% forward starting dividend yield and a 60 on the dividend safety score, so it's technically the safest dividend we've went through so far, but it is starting at a very low yield compared to many other stocks out there. Now, Lennar's trading has actually turned around for the better as of recently, and it's actually up over 19% year to date, and on the max time frame up 2,800+%, so this stock has grown like crazy over the last few decades. Now, on the 52-week range, Lennar is trading towards the higher end, between around $70 per share and $133, but this one is definitely still on my radar and should be on your watch list if you want a potential growth monster within your portfolio. The next Warren Buffett stock that's on sale is one of my other favorites. It's Kroger. KR is offering a 2.61% starting forward dividend yield, and the dividend is a 71 and is considered safe. Now, Kroger is one of those names that I was lucky enough to grab some shares of in 2020 for quite cheap, but I ended up selling them off shortly after. But maybe with the recent trading that Kroger is offering, it might be a good time for me to grab some more shares sometime soon here. Kroger is flat year to date and is trading towards the lower end of the 52-week range, but on the max time frame, it's no doubt that Warren Buffett loves this one. It's up 1,656% without dividends included. Now, Kroger's forward starting dividend yield is around 2.63%, which isn't the highest dividend in the world, but it is a safe dividend, and Kroger has not only paid dividends every single quarter for a while now, but also has had some nice dividend growth along the way, just a few quarters ago raising their dividend from 26 cents per share per quarter to 29 cents per share per quarter. The next Warren Buffett stock that's currently possibly starting to be on sale is Johnson & Johnson, ticker symbol J&J, offering over a 3% starting dividend yield. Now, when it comes to dividend safety, Johnson & Johnson has as safe as a dividend as Simply Safe Dividends puts it on the rating scale, a 99 or very safe. Now, Johnson & Johnson is down around 12% year to date, and J&J was in the past a holding in my personal portfolio, but I ended up selling it off for a small profit and redistributed the money in some other ETFs and such because Johnson & Johnson just didn't really have the growth that I was hoping for. But on the max time frame, there definitely has been some growth when it comes to J&J, up around 1,400%, not including dividends, and J&J does have a long history of paying dividends on time and raising them. 3.03% forward starting dividend yield, 60 years of dividend growth, and Johnson & Johnson without a doubt is definitely a dividend growth king. There's not really any other way to say it. The next Warren Buffett stock that's definitely on sale right now, or starting to be on sale, is Coca-Cola, ticker symbol KO, offering a 3.44% starting forward dividend yield and an 80 on the dividend safety score. Now, Coca-Cola is down 15.03% year to date and has been trading pretty rough over the past few weeks. On the 52-week range, Coca-Cola is at 51 on the low and 65 on the high. So it is trading pretty close to the lows and has definitely been on my watch list over the last few weeks. And with the recent trading, Coca-Cola's dividend is actually getting pretty big, offering a starting dividend yield of 3.48%, which is not too bad at all. Now, Coca-Cola, just like Johnson & Johnson, is definitely considered a dividend king in my book, paying dividends consistently for longer than I've been alive and raising their dividends pretty much every single year. Now, the last and final Warren Buffett stock that's currently on sale or starting to get there is Kraft Heinz, or ticker symbol KHC, offering a 5.05% starting forward dividend yield and a 50 on the dividend safety. So not necessarily the safest dividend, but probably not going to get cut or anything anytime soon. Now, Kraft Heinz is down 22.45% year to date and basically trading pretty much flush with the 52-week low. On the max time frame, Kraft Heinz has not really performed all that well either, down 31.25%, but the forward starting dividend of around 5.1% more or less is definitely tempting some more dividend income focused investors like myself. But looking at Kraft Heinz's dividend history over the past, say, 10-20 years, there has been a dividend reduction. Back in 2018, a dividend reduction from around 63 cents per share on a quarterly basis down to 40 cents per share, which is a pretty painful reduction, and since then the dividend has been steady, stuck at 40 cents per share per quarter. Now, Warren Buffett is generally pretty particular in choosing stocks to add to his portfolio, and this is why a lot of dividend growth investors look up to him a lot. Now, also, Warren Buffett is one of the most successful investors of all time and has a unique and well-documented approach to investing in dividend stocks. And even though Warren Buffett isn't necessarily known as a dividend-focused investor, he does consider dividends when making investment decisions, but these are some of the basics that Warren takes very seriously when choosing which dividend stocks to pick. Warren Buffett looks closely into things like strong business fundamentals, also things like consistent earnings and cash flow. Warren Buffett is also a huge fan of share buybacks, a nice long-term dividend history, and of course, Buffett is known for his long-term approach to investing, so a long-term perspective is definitely going to be key. Now, it's important to note that Warren Buffett's investment philosophy is based on the principles of value investing and the careful analysis of individual companies. He's not limited to dividend-paying stocks, though, and he's made a lot of money off investing into non-dividend-paying stocks as well. So there we have it, guys. Those are 7 Warren Buffett stocks, Warren Buffett companies that are currently possibly undervalued as they sit as of now. But I want you to comment down below, out of all the stocks we went through in today's video, which is your absolute favorite Warren Buffett stock? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.